Welcome back. Hope you're having a good morning. Well, for starters, the GIFT Nifty is suggesting we pull back a little bit. But remember, Friday's trading session, we had a good pullback rally. Plenty of stocks to discuss. We'll be talking about Reliance Industries in just a bit. But for the time being, let's welcome Prakash Diwan. He's joining to help us about the fundamental analysis about some other companies. Hi, Prakash. Good morning. Tell us about Ultratech Cement. You know, they had hinted at the end of Q3 that they're going to be announcing the next phase of expansion. And they've done that at around $72 per ton. Your take on this announcement, both for the company and for the industry at large?
Good morning, Nigel. So I think Ultratech continues to be on a roll. There is absolutely no let-up in the kind of, capacity that they're building up. And that's essentially to make sure that they preempt any other capacity additions in other pockets where they are present or they are dominant. So my sense is, the big will continue to get bigger, and there's a very overdue kind of a round of consolidation in the industry. So to answer your question specifically on what's for the sector, I think some of the smaller players, anybody who's less than 2 or 3 MT doesn't really need kind of to be around in the market for too long, because it's going to be very competitive once, these big players start kind of flexing. So if you look at the capacity addition that's happened in the top 5 names, it's actually equivalent to almost double of what the industry used to be about 4 years back. So that's the kind of scale that's building up. Of course, there's a lot of demand that needs to kind of absorb all of this, which is something which we'll have to work on or worry about a bit later. But I think Ultratech's expansion and especially the focus that they're doing on shifting towards green energy, that is just quite commendable. The market will like it. It probably continue to get traded at elevated premium valuations as well.
Okay, I do want to ask you about Reliance, of course, but we'll do that in a bit when, our next guest joins in. In the meantime, Prakash, I wanted your thoughts on Cipla. The company has raised their guidance for the margins, and the stock has also done well, right? I mean, in the last 6 months, if you look at it, Cipla is up almost 30%.
Yeah.
Is the risk-reward still favorable at this price of almost 1,200 rupees?
Good morning, Sonia. So, Cipla is something that reminds you of Rahul Dravid's way of playing. It's very steady, rock solid, does its bit, but doesn't give you any fireworks all the time. So it's not a Sun Pharma or it's not a Dr. Reddy's, which could dramatically, move up and down. But my sense is that Cipla's portfolio is something which will probably get defined in a very narrow band of growth. So the next phase of growth is going to be from a lot of people, Sonia, where, the US FDA advantage of higher levels of approvals. And, I don't know if you've looked at that, but in the last 6 months or the first 6 months of the year, calendar 23, they're close to about 55%, increment in ANDA approvals by the US FDA. So that's going to start spilling into a lot of business for most pharma names. Cipla will probably not benefit much out of this expansion, given the fact that they have a very defined, well-defined portfolio, which hasn't got too much of a pipeline as much as some of the smaller names like Glenmark and Lupin and all of that. So I would believe, yes, he'll perform. The risk reward is favorable because the risk is low, but the reward also is a bit capped as compared to other names.
Guys, by the way, on Cipla, Ekta was talking about how Cipla is working on getting that weight loss drug, semaglutide, into India. It's a rage, I have to tell you. I don't know if you... we don't have TikTok here, but not apparently, it is true. It's the first drug which has gone viral because of TikTok. I mean, because of people posting how much weight they've lost on social media. It, by the way, was an anti-diabetes drug. And they found the use that, you can also cut weight. So,
I don't know about that. I don't think any of us should try it.
And by the way, it's expected to be the single largest category. Yeah. I mean, even greater than cholesterol. And I think $100 billion is what the market size is estimated at overall, all across the country, all over the world, actually. But, as Sonia said, it's not I'm not saying it's a recommendation or anything, just trivia more than anything else. Prakash, hi, good morning. Just a word on Maruti. Maruti reported numbers. I looked at earnings expectations for the full year. Post the second quarter beat, earnings expectations for the full year have moved up substantially. I mean, it's actually some 10% upgrade to full year numbers. But the commentary in terms of growth, etc., doesn't seem to be all that great. I think some 5, 10, 12% kind of growth is what, I think the management themselves and the street is expecting from them. What's your sense? Are these numbers in the price or there is more here on Maruti?
Good morning, Prashant. So quite interesting question, because I also, went through that interesting format of the presser this time. And what seemed like, I mean, this is typical Japanese. I mean, it's Suzuki all the way in terms of the response, the kind of articulation, positioning. So, you need to understand that what Maruti's done after these recent numbers and in the recent quarters is that, and, remember, the management came some time back, in fact, when the marketing head had come, and he said, we are expecting a bit of softness in numbers given the fact that demand hasn't yet taken off. Festive season could probably bring in a bit of cheer. But the numbers tell you a very different story. That's the reason is a lot of the other players are seeing fatigue in their product launches, in their pipelines, in their distribution reach. So last year there was Kia and MG, which had a huge burst of energy, and you saw Maruti lose out on this thing. Maruti is likely to grow its market share, without too much of its own efforts in relatively. I'm not saying they don't need to do anything, but what's going to change is they'll become dominant in the SUV segment now. And if that were to happen, you can imagine what they did when they were 43% of the entry-level segment. If they can do that 25% kind of a thing on SUVs, it's going to be a very different margin profile. And from that perspective, all these investments that they are making will start kind of throwing very good ROE, ROC. So that re-rating of the stock is yet to happen, but people would want to see results as well, Prashant. So it's not going to be, before things happen, you start pricing it in. But my sense will probably do very well for the next 2 years, barring competition from Tata Motors, which is on an absolutely different runway, given its electrification focus. So there are different vectors, but I think Maruti still has a lot of headroom to do well over the next couple of years.